This is the last video in our accrual to cash and cash to accrual conversion series. Again, we're looking at Haynes Celestials, which you can find in your activity packet or at the bottom, or link to the bottom of this video. So what do we do? We're looking at Haynes, and now the question we're looking to answer is what is cost of goods sold? Okay, and the two pieces of info. So the answer that we're going to want is over here on the right hand side, cost of goods sold. I'll just label it COGS. We know we're going to start with cash, because if we look at the modified income statement we have at the bottom of these financial statements, we have cash sales to customers, cash paid for inventory production, so that they actually cash they paid. Now we have two accounts that go through here. One is inventory, we know, and I'm going to put that over on the right hand side because inventory and cost of goods sold ride together. Okay, and I am going to put the accounts payable here, assuming that they purchase all inventory on accounts payable, which is almost always true with regard to large corporations. They're not walking out somewhere and paying cash for something. Okay, so let's throw in some of the data we know. Well, let's look at the inventory balances on our balance sheet. And we know, and this is again is a debit balance because it's an asset, the beginning balance in inventory is $175,667, and the ending balance is $158,590. Okay, let's look at accounts payable, and the beginning balance in that account is $94,864. And this is a credit balance. The one mistake that students will often make is to get these in the wrong column. And that is a major point deduction, because you should know that accounts payable is a credit balance and inventory is a debit balance. The ending balance in accounts payable is $95,999. Okay? So then the question is, let's go ahead and start working through the computation. So how much cash was paid for inventory production? Well, it was $858,132. It was cash going out. It was cash paid, so that would be a credit. So $858,132. Okay, we're going to take this number, that's a credit, and we need to put it a debit somewhere. And that would be the accounts payable account, $858,132. So that goes right here. Okay, so there is some number X such that 94,864 plus X minus 858,132 equals 95,999. Let me put a little bracket around that. Okay, solve for X. If we solve for X on this, I believe the number is 859,267. So 859,267. You should always check your work when you're done. So this is then a credit to accounts payable. So it's going to be a debit to inventory. 859,267. Okay. And then again, going to solve here. There, and this is probably should be Y because I've already used X. Let me erase the part of the line anyway. So there is, if we take 175,667 plus 859,267 minus some number Y, that will all equal 158,590. Solve for y, and the answer is 876,344, I believe. 876,344. That's a debit balance to the inventory, and so it's going to go as a credit to cost of goods sold. 876,344. So the answer to my question, what is cost of goods sold? Well, it equals $876,344. Okay, and we could walk through the journal entries. This would be a debit to accounts payable, a credit to cash, which means they paid off some of their accounts payable. This journal entry would be a debit to inventory and a credit to accounts payable, which implies that they purchased this amount of inventory from their clients. And this 876 number, the debit to inventory, the debit to cost of goods sold and the credit to inventory, this is how much they transferred out of inventory and actually was used in production. So that is the last of this series on a cash to accrual and accrual to cash conversions.